Okay, everyone, welcome to Property versus Trading today. A little bit about what is the purpose of property versus trading. Property versus trading purpose is to introduce you to the two asset classes of diversification to minimize your risk and increase your returns. For traders, it is no one additional asset class that they can put their money to work further. Property investors to learn an additional passive cash flow stream that they can possibly reinvest back into properties. 29 years of property experience. He is regarded as one of the UK's most influential and most respected property investors and developers because of how active he is in the UK property market. But it wasn't always like that. He grew up in one of the poorest areas in East London, and his circumstances motivated him to escape from life that many people were stuck in. Fast forward to today, Kam has implemented and still does implement a variety of property investing strategies successfully, such as buy-to-lets, HMOs, serviced accommodation, permitted developments, new builds, and commercial conversions, which means he has built up a significant multi-million-pound property portfolio. He now uses his knowledge, experience, and contacts to help other investors and developers, both new and experienced, to take their property investing to the next level. Kam, it's a pleasure to have you.
Yeah, Thiru, thank you for having me. Internet's coming through fine.
Okay, that's great. Okay, so good to have you today on our interview today. Just to start off, just a little bit before we go into the more detailed questions, we just want to understand actually how did you get into this whole world of property, Kam? I mean, how old were you when you started? What event or who triggered your interest? And do you do other things along with property as well?
Yeah, so to be fair, to be honest with you, I fell into this. I fell into it at a very early age. I was only 19 years old. And really what I was something that's known as a mortgage host. So what that means is, just for clarity, is my cousin wanted to buy a property and his wife wanted to buy a property. They just got married, but my cousin couldn't get the mortgage. So they said, come over here. And me being young and naive, and I keep that little bit of naivety, by the way, it always keeps the doors open. I said, okay, sign the dotted line, and that's really how I got into it. But then when the market fell, as soon as I got into that property market, it fell over the next 3 months, and we found out we were in negative equity. My cousin said, I don't want the property anymore. You have it. So what do you do? But that really is where the property journey all started. And fast forward to today.
Oh, okay, that's interesting. It started from a positive thing, and that's how it all started, isn't it?
Yeah, absolutely. I mean, I don't know if people listening in right now, they might find it's challenging times as it is for everybody at certain times in their life. But sometimes, what I've noticed is it's the point when you're in the most painful point where actually you really stretch and you really grow. And I suppose that kind of relates to property and it relates to trading. I'm a trader as well. I have traded in the past as well. So it kind of relates to everything when you're in business, doesn't it? And when you want to grow
Yes,
well.
definitely, and I'm sure we'll go further into it later on as well. You see, as we go into the first few questions, Kam, I just want to tell you a little bit about in trading. So you see, for example, in trading, we have different types of traders, like position traders, swing traders, intraday scalpers. So similarly, in property, there are different types of strategies like flipping, buy and hold for yield and capital appreciation, and so many more. I mean, another one that we usually hear people talking about is option purchases using property. What would you say is your main style of property investment?
So the interesting thing is that trading and property have similar aspects. So to answer your question directly, there are actually three key parts which create this, and that is some of our strategies. It's all about strategies. So some of the strategies are about capital uplift, so creating a capital gain. Other strategies about creating income and passively. And the strategy is to create some earnings. So you've got cash available through associated businesses. And these are three key aspects that we work on. And your strategy really defines that. So, things like options, we use options in property as well. It's a method of getting a result, if that makes sense. But the three key are those, and there's something that not a lot of people really think about. Having that earnings, having that passive income, and also having a cash uplift. So if you can marry all those three in, and you have an agenda, you got something to start with, knowing what your outcome is, then that really helps.
Okay, that's good. Yeah, that's very good that you said knowing what your outcome is, and I think we will go a bit more deeper later on into it. I think that's a very good way of thinking of things before you start, what the outcome is. Now, going further into how would you enter into a property investment? So, for example, you see in trading, we look for a market retracement. So let's say right now the market price is £2,000. We wait for a retracement to about £500 on a stock or on a currency, whatever it may be, to capture that turning point. Or we can use momentum back in the market to enter the particular trade. So how do you guys do it in your property investments? Is it more like value investing where you buy below market value, or you're looking at more on yield? Is there like a concept to all the investments and that you take?
Yeah, it's a great question. So the way we do property deals, every single project that we do, the outcome always is to have it no money in. So every single deal, I'm not saying money isn't involved. Money is always involved, and be careful of people telling you about no money down and all of that kind of stuff. My view, more than my view, what we're actually doing is what I'm sharing, of course, is what we're actually doing is every deal is no money in. Money is required, but that can be in many different ways. Maybe we have a chance to discuss that. And my point is that when you think of that, no money in, we actually have a system which is called the bar system. And maybe I'll share that with you a little bit later on if we've got some slides on that. And the bar system, no money in, works with different strategies. So it's not just one thing. Specifically, it's three things. It's making sure that you got no money in. Also, it's about using the right strategy. And at Premier Property, we've got 10 specific strategies that we use. And to be fair, if I'm completely honest with you, they work at all different parts of the property market cycle. As you've got in trading, I'm sure you've got different, the cycles and the ups and downs and so on. In property, there is that as well. And there are 10 specific strategies which you can use at different parts of the property market cycle. When we have the chance later on, I'm happy to share that with you as well, to show you a slide on that. And when you do it this way, any time actually becomes the right level to get in. You can buy when the market is declining. You can also buy when the market is increasing. You can also buy when the market is at its peak. And you can also buy like times like this when we're in a recession. And if you were to really optimize and really look for that sort of optimizing moment, my personal belief is that we've got that right now, where we've got so many things that are working for us in property, and that's now where we're already in a sort of declining market. So summary, what I'm saying is that you can make it really work at every different level, wherever it is in the market, but you need the right strategy. And you also need to be aware that any type of deal that you're doing is you're making it no money in. If I'm making sense for you.
Yes, of course. Yeah, I think as we go in, I think you'll be showing some examples. So I think it will make it more sense to the viewers and the audience listening in as well. It's interesting to know that you guys got the bar system and the 10 strategies. What would you say actually, Cam, is one of your main specialities, would you say? Or would you say you don't really have one, or you choose one according to the market condition?
Yeah, so people listening in, what I would always urge them is there's always something new, there's always something exciting, or when you get good at something, there's always that sort of urge to do something else, because we're human, right? There's a bit of variety that we look for. But what I would say is it's all about focus. So what we do is we do focus, and I would say really we have 3 specific strategies out of those 10. The other, what then happens is you bolt on satellite strategies, let's call it. So at Premier, we call them satellite strategies, which really bolt onto your main strategy. So I would say, if you're asking me main strategies, that would be buy to let, for example. Buy to let done really well, extremely valuable, great way of doing no money in deals. I might show you an example later on. And around that, there's many satellites. So that's the main strategy. Around that, we've got things like sourcing properties. You've got things like accelerating income and going into HMOs. But it all is fundamentally from that buy to let. So that's one strategy. Another strategy that we've got is actually development. And when it comes to development, around development, you got various different types, right? So you got commercial, you got residential, you got planning development strategies. But when you think about it, really, the focus is one big strategy, which is development. And these really marry into what I shared with you earlier. So when we're looking at this, there's three key parts: the earnings, the passive income, and the cash uplift. So the first one I've just covered with you, buy to let, is a great way for passive income. Developments are a great way for cash uplift. And when we talk about the earnings, the third strategy we have is strategies where you don't need much capital. So, great ways of getting in, things like service accommodation. So serviced accommodation, where you're renting and then re-renting properties, is another one of our strategies. And that really is a purely cash strategy, which is the earnings. So, yes, we have these three, and there are other satellite strategies bolted around them. But you listening in right now, I would say really focus on the one that is really key for you, and start with one, and really get good at it, really home in on it, because you don't really need a lot of strategies, but you need to be aware of them and really find out which is the right one for you, which really helps.
Very well explained, Cam. Thank you for that. I think it's very nice how you segregate those three different types, that you said, where it's for cash uplift or earning strategy, or for a yield related or buy to let kind of strategy. It's really very good. Thanks for explaining that. I'm sure through the examples that you'll be looking at later, that will come into more clarity. The next thing what we want to ask you is that when you buy your properties, do you look into the individual property in question, or do you also look into the overall market conditions as well? For example, COVID-19 as of now. In detail, what we're really asking over here is that, so just like rather than just looking at the property, let's say you're looking at a property, it's about 15 or 20% below market value. Do you just look at that alone, or do you see that in perspective of what's happening around the world and how difficult it might be for the cash appreciation or for the yield? How do you do that?
Yeah, another very deep question, Thiru. So, of course, you're very good at the trading side of things, and people listening in, they may already be traders, or maybe they want to jump into property as well. The thing is, there are similarities, because it's a business, and we're treating property as a business. We're treating trading. I suggest you treat trading as a business. You know more about that, right? So, what I'm saying is that there are a set of rules and criteria that you follow. So the myth is you buy discounted values, 30%, 40% below market value, and all this kind of stuff. What that really does, I'm just keeping it practical and keeping it real with you, right? What that will just do is that will just frustrate the estate agents, and very hard for someone to get deals like that when they're entering a market. So you can achieve the same result by having a set criteria that you follow, and it's not just one thing. There's a number of things that you look at. Very simple things, simple ones that have been explained, and very doable. So, for example, one of the things that we look at is when we're using our bar system, is it's not just the discount. It's partly the discount. It's then partly being able to add value to the property. So you're increasing the asset value. And then also, it's about being able to release that capital. So when we're looking at properties, we're always thinking, no matter where we are in the market, how can we make this, like what I said earlier, how can you make it a no money in deal? No money in meaning none of your capital is actually in it anymore. How can you do that? And you think of that of the outcome right at the beginning. So you got that right from the beginning, which means that you got a bit of peace of mind, understanding that what you're getting into is really good, and you know what you're following, if you're following me. So what happens there is, yes, so you'll have some discount. You look at that. Area is also very important in property. So one of our criteria is the areas that you invest in. Where if you're on a income play, then you're looking for yields, of course. If you're on a cash uplift play, then you're looking for capital gains. And we put specific numbers to them. So, for example, cash uplift, we're looking at minimum 20%. When we look at yields in the areas that we invest in, we're looking at 7% minimum. And usually it's 10% plus. So what I'm saying is you build this criteria, and you're quite right. A lot of people out there are gambling. They're gambling when it comes to trading, and they're gambling when it comes to property. But the great thing is, obviously we're sharing this right now, where we've got, quality webinars like this. You can really learn from people who are actually doing it and really make it your own, right? So you can create these criterias that actually work for you. So you literally, it's a tick box criteria. And that really works in any market condition. What we got right now, you mentioned COVID-19. COVID-19 is something that has come along, and in a recession, there's always something. There's always something that comes along, and we can never predict it. However, you can create a process for every recession. I've been through, this is my fourth recession, and every recession that we go through, what I've noticed is quite shocking, really, that every time the process on the way the recession actually happens and how it then proceeds is exactly the same, but the reasons are always completely different. I mean, who would have thought last time round it was going to be a financial crisis? And who the heck would have thought that right now we would have what we've got going on right now, this pandemic, right? Obviously, a lot of people's lives have been touched by that. But in terms of business, in terms of property, and I'm sure it's the same for trading, the volatility and situations like when we're actually in the recessions can really help, because as entrepreneurs, which I'm guesstimating everyone listening in is an entrepreneur, and you are treating it like a business. That's why you're here. You're clearly demonstrating that. When you treat it as an entrepreneur, you treat yourself as an entrepreneur, and you're treating it as a business, then the actual fluctuations in volumes, fluctuations in prices, uncertainty out there can really help you, because you have that set criteria, as I've just shared with you, which you can just follow. Which means that you got that again. You have that peace of mind, and you have a direction that what you're doing is you're not gambling. You're actually de-risking, and you're doing this correctly. So that's how we do it, through to give you a long answer for a short question.
No, but it's good that you explained it very well in detail. I mean, there's a lot of principles there which are quite universal and cross-transferable. I mean, one is you're always looking at how to minimize risk, which is very good in the mention that you said right from the beginning, think as an outcome of no money in. I really like that. And everybody listening in, and everybody who'll be listening in to the recording as well, I mean, definitely do that's one of the very important takeaways. Anything that we do, I always tell all our traders as well, think of the outcome first and then decide, then work backwards and design the strategies or pick the strategies that will then fit with the outcome. So thanks for that one. And also I like the fact that you gave of a quantified parameter of if you're looking at income yield, look at least 7% minimum at least, so that those were very good that you shared. Thanks for sharing that, and then also in line with the COVID-19 situation, which you're absolutely right. Every recession happens, and usually we say a recession generally happens every 8 to 10 years. This one is a bit long overdue. I mean, it took about 10 years to come in. But you're right. Every recession, there's a different reason, but the principles are the same. And we just have to keep our eyes for the opportunities that are in line with us and make the best out of them, because in every recession, there's always opportunities out there. And I'm sure you will agree with that as well.
Absolutely. And right now, to be fair, it's a very exciting time in terms of property investing and developing and finding your strategy. But property right now is extremely exciting.
Mm-hmm. Now, going on to the next one, I mean, I just want a quick question on, in terms of your learning so far, is there like a best property investment that you have done to date so far? And how would you classify best? Would it be best lesson learned or highest yield or capital earned?
Now that's an interesting question. So what I love about property is that you can actually you can start running your lifestyle through it. So I mean, and there's various different types of bests, right? So it depends how you're measuring the best, right? So for example, we're doing a project just now where we're building 10 flats. That's a full-on development. Now many people say, oh, that's a large project, but actually, that's a small development. If I'm being completely honest with you, that's a small development project. But that development project, that's a 1.5 million end value project, where we've purchased it for 315,000. That's the value. And we use a creative strategy where, you mentioned options. There's various ways that you can do it. But we used a creative way where really all of that was secured with 17.5K. And
Mm,
that 17.5K came from somebody else. That was a no money in deal right from the beginning. And my point of sharing that is, so once the project is done, with God's grace, once that is all done, if I'm allowed to say that, once that project is completed, the profit that comes from that, it's okay to treat yourself with that. So I always tend to buy a car or buy a nice watch. I like watches. Maybe you like whatever you like. It's good to feel that you've actually got to a stage where you've won something, you've achieved something, and it's good to actually sort of nurture your own soul. So one way best would be an uplift like that, and people listening in, I would say something that some people don't do. When was the last time you actually treated yourself once you got a result? When was the last time you actually nurtured yourself with the fact that you use some of that money to buy something with? Think about the things that you enjoy, whatever those are. So, for example, things like that, what I just mentioned. You can buy things, cars, watches, whatever excites you. Other things, another best is, so I'll give you another example. So we've just recently converted a property which was a normal 3-bedroom property into a 5-bedroom HMO. So just for clarity, how's the multiple occupancy, where we're renting those out room by room, and each room we've also made it en suite. So that's 5 en suites, bedrooms, converting a 3-bedroom house. Now, the income from that, we're looking at, net £1,500 to £2,000 on a monthly basis. That's coming in regularly, with a nice co-living space where the people that live in there are happy. You give them really good accommodation, and you're making the net couple of £1,000 per month. Now, we got I would say, reasonable portfolio, staying humble. Many people look at a portfolio and say that's massive. But my point is that those types of deals, you don't really need a lot of them. One deal like that's what, £24,000 a year. Even a small one would be 12,000. So 12,000 to £24,000 added as passive income from a project like I'm just sharing with you. Let's be fair, that's quite a lot of money, isn't it? Which, how many holidays, can you spend that on? Or if it's your child's education, how many terms will that pay for? So you can start thinking about that. For someone in a pension age, how much of a pension can they use that for as an additional income? So you can start really enjoying the fruits of your success, and your bests become the best like this. In terms of thinking, what kind of money you're generating, so capital or income. I mean, another best is when we join venture with people. So one of the things that which you love about property is that you can actually connect with people, and you can join venture with people where they bring the money along. So many people work with me, they join venture with us. I've trained over 150,000 people. I've mentored over 1,500 people. Only because we're actually doing the projects. But what I'm saying is, you then attract people, and you attract good people, and you create relationships. And another best is actually, having done a project with someone where maybe that for them it's their first project, but you've been able to hold their hand, get them into it, get them to actually experience it, get them to enjoy it, get them to explore the challenges and overcome the challenges. And at the end of it, there's a real buzz. And then now they're on to the next project, if you can imagine. So, and they're very thankful, and that relationship builds. In my view, connecting with people and doing all of that is also another best, when people can honor you and you have those long-term relationships. So there are a number of bests. I've shared 3 there with you.
okay, that's nice. Yeah, it's very different in the way that you identified the best, which is very good. I mean, in terms of, converting your properties, in terms of jailing other people, it was really good. Thanks for sharing that insight. The next thing what I want to ask is, in a recession, banks usually stop lending, or they get very strict. In the world of trading, we tell our clients to make the money off shorting the markets and put into property as a down payment to get their lending, to diversify their portfolio, minimize their risk. What other suggestions would you have for people, especially during this kind of pandemic situations?
Yeah, I mean, in terms of property, you know better about the trading side. But in terms of property, I mean, this is such an exciting time because this recession is actually very different. In the last recession, it was a financial crash, of course, as we all know that. But this time round, we are speaking to a number of lenders, speaking to quality mortgage brokers, CEOs of companies, and so on. And what we're finding is that this time round, finance is extremely available. It's readily available. It was only was it last week? I was speaking to one of a good friends of mine. He's actually a billionaire. They lend money as short-term finance, and he was saying to me, Cam, I've got over 20 billion pounds of a line of credit to lend, and we need more organizations, more companies, more people to lend it to. So the lenders' challenge right now in property is that they want people like you listening in to actually get onto the property ladder, get involved, and they want to lend to you. The money is available right now. So it's not the case of money isn't available; it's readily available. And on top of that, COVID-19, what is it doing? Well, like I said earlier, it's kind of it's scaring the people that don't have the knowledge on what to do. Once you have the knowledge and you have the specific information on what you need to do next, it just becomes so much easier, because it becomes so much doable, and the confidence just starts to grow. Now, I'm not saying that the fear always goes away. In my experience, and I'm just being honest with you, fear doesn't always go away. There's always a little bit of fear, and that is normal. If somebody had no fear at all, they would be overconfident, and that would mean that they would actually lose money. And by the way, I've been like that in my life, and we measure confidence between 1 and 10. 10 is when you think you're invincible. I got to that age at 25 when I was financially free through property, and then I lost all my money, and then I made it back up again in the next 3 years. But then I realized that you got to be careful of becoming overconfident. I mean, I don't know if you find that in trading as well. You got to have your set criteria. You got to keep to the numbers. You got to be careful when you're adding another zero. Because it's a human thing, isn't it? So, what I'm saying is the confidence starts to grow with specific information and knowledge. And once you've got that, that's great. The fear, in my experience, like I say, there's always a little bit of that, but that's a good thing. That's a good thing, and knowledge helps you to diminish that. That little bit of fear keeps your confidence level in check. So as an experienced investor right now, obviously everyone starts somewhere, and I started somewhere. My confidence level, if I'm being completely honest with you, was a 1 when I started. I had no idea about property, over 30 years ago. But then, we created really good systems that you can just follow, processes that you can just follow, which, to be fair, anyone can do it. If I can do it, anybody can actually do it, to be fair. I mean, I'm not really an intellectual person. My background. If I'm honest with you, I can't even spell properly. But you know what? We know how to make money because we've got great systems that you can just follow. So to be fair, anyone can really do it, provided they follow the system. And when you do that, you keep your confidence level not at a 10, at one step down to a 9, if you're measuring it between 1 and 10, like I do, then you're always checking in with yourself. You're always checking your deals. You're making sure that you're fitting your criteria. You're making sure that you're checking on the numbers, making sure the numbers work, for every single deal right at the beginning. And you're also checking in, and you're checking in on your humility. Are you being humble? Are you honoring people? Are you answering people? Are you behaving the way that you should be behaving? And it's an internal conversation. So there are some operational, practical, and also sort of heartfelt decisions that you need to make on how you keep yourself at a 9. I mean, I'm just sharing my view on what we actually do. So when you do that, a little bit of fear is okay, because that is normal to keep you at confidence 9.
I like that, Cam, how we're turning the negative inside out, which is, most people are scared of fear and fear of failure. But when you say that the fear can keep the confidence in check and keep you going forward, that's a really good way of looking at it. And also another turning point and shift in the mind is that finance is extremely available. I mean, during these times, I mean, it's right. In
Absolutely.
any recession, I mean, there are always opportunities. Same in trading, but especially in trading, especially when the markets crash. I mean, that's when the biggest money is because, markets take about 6 months to fall, but it takes about 6 years to climb up and make the same amount of gains. So as professional traders, we do understand that, but it's the same thing in property as well. What you're saying, the principle is the same. It's just where we keep the focus on and who we know. Just a quick thing, Cam, we would just like to know your opinions, especially in the current situation that we are going through in the COVID. Tourism has been affected a lot. I mean, traveling has been affected a lot, and you can't even really do any essential travel. Airports are almost empty. So, in situations like that, like the Airbnb sector, for example, I mean, how do you manage that kind of service accommodation kind of a strategy, or is it that you do not do them during this period of time? And also expanding on that, one is Airbnb, and the other is also the commercial side of the property investments like offices, like retail outlets. They are getting a big hit as well at the moment, and we know that Debenhams recently closed down as well. So, what would your views be all of that in terms of these sectors during these times? Would you avoid them, or is there a creative way of still making them work?
Thiru, I think you've come up with some good concerns, and these are concerns that people have before they actually decide to get the information on how you can actually do it. So they're good concerns that people have out there. So I'll explain. So one of our businesses, as I mentioned, is about the actual earnings, right? Which is the service accommodation, rent to rent type of business. Now, let's be honest. We had to adapt to that very quickly, and the key here is, and maybe listeners want to write this down. Whether you're trading or maybe you agree with the trading side, whether you're trading or whether you are in property, you got to adapt. You have to adapt. That's a key word there, because it's a constantly moving target, and it's constantly changing and evolving. And COVID-19 is exactly this. So to answer your question directly about the service accommodation rent to rent side, where we're renting from landlords and re-renting, because those are properties which are actually liabilities for those owners, whereas they think they're assets. Maybe we can discuss that another time. Yeah, we wouldn't buy those. We buy quality stock, which actually makes money. So putting money in your pocket. So what we do is you always rent liabilities and you buy assets. Assets putting money in your pocket, liabilities taking money out of your pocket. So what we do is we rent them and we re-rent them. And the market has changed. We had to adapt. So when we had the first lockdown, and I didn't wait for the government to make decisions, you need to control your business. You need to make decisions quickly. So the first thing I did was I sat down with my 5 trusted advisors. So myself, I'm a mentor for people, I guide them. I also have mentors, because in this business, you always need someone that you can run your ideas by, get confirmation, learn from, all of that, right? So first thing I did was I consulted with my 5 closest guides, a couple of my mentors, my team, and so on. What are we going to do? What are you doing? Because a mentor will be doing what you want to be doing, right? I think we should all know that, right? So I asked a couple of my mentors, what are you doing? So I'm a multimillionaire. Okay, fair enough. The mentor I'm talking about, the particular one in property, he's almost a billionaire. So it's a question. Well, I'm doing this. What are you doing? And then getting the confirmation. Oh, actually, right. You're doing the same thing as I'm doing. Great. So I'm doing the right thing. So we consulted that, and we had to adapt. So things like, if you're asking about rent to rent, yes, the travel market has changed. But what we're finding is that the local market is absolutely brilliant in terms of getting guests on board. So instead of working with the overseas market, we're working very locally. For example, local contractors. And on top of that, people have people that I train. They've got properties in areas where they are using them like staycations. Obviously, people are not really going abroad right now, so people are traveling around within the UK. So these are just a couple of ways that you can do this. Now, again, keeping it absolutely honest and straight with you, we always make sure the way we do business that there's always a scenario where you have plan A, and you always, as a bare minimum, have plan B. Sometimes we'll have plan A, B, and C. And my point is, our plan B with the service accommodation rent to rent side is that our contracts are extremely tight with the landlords of the properties. And in there, we have get out clauses. So we literally negotiated with landlords, and we did shed about a third of our portfolio. We got a good sized portfolio, many would say, and we shed about a third of that because the landlord said, "Sorry, no, we wanted to strike deals with them. We wanted to reduce the rentals and so on." And the third that didn't want that, we gave the properties back to them because that's what you can do with the rent. The others, we actually managed to create those relationships, and we're still making money for them, and we've also adapted in that way, if that makes sense. That's on the rent to rent side. On the other side, in terms of commercial development, I mean, that is so ripe. That is so exciting right now because there are some seriously important changes happening in, for example, permitted development and development. Boris Johnson, whatever you think of him, whatever your ideas are, if you're listening in, that's your idea, that's fine. But one thing that he has done, he's created this white paper, which in a nutshell means that he's made it so easy for all of us to actually be developing and be involved in permitted development. There are permitted development changes which are just coming into effect just last September, 1st of September 2020. And there are new PD rights that have come in place. And also there are old permitted development rights that came in place, which are expiring on the 31st of July 2021. So there's this short window of opportunity where you can really learn about this stuff and you can really jump in. And it's not complicated. It's just a system that you follow. So rather than, it's a case of is your glass half full or is it half empty kind of scenario. How do you view the opportunities? Do you see them as opportunities? Or is it like what the media is saying? What we're finding at Premier Property is that there are massive opportunities. And unfortunately, the recession, if you think of the numbers, for example, for retailers, the numbers that were actually put out there this time around before Christmas rather than after Christmas, I mean, they're devastating numbers. And there's a lot of, unfortunately, retailers that have gone into administration or gone bankrupt. You only got to look at your local high street, right? You only got to look at your local amenities and so on. And what you'll find is that there's a lot of empty properties that are coming up available. And like I mentioned, the government are making it so easy to actually get into this where, you can utilize these properties. First of all, you're bringing them back into check with the community. Secondly, you're making a lot of money from them. Thirdly, there's not a lot that the planners can actually do about it because a lot of it is in your control right now. Of course, you've got to learn the detail. Happy to share that with you, the detail. And there are massive opportunities. So in both realms that you asked there, Thiru, both the rental sector is very exciting, and the development sector is actually extremely exciting. And the recession, COVID-19, very sad about everything else that's going on. However, in terms of property, it's the best opportunity. I'm going to put my neck on the line and say this is the best opportunity that anybody will find in their lifetime, not just 10 years. It's a lifetime of opportunity. And to add to that, you mentioned finance. Interest rates are so low right now, and we all know that, right? We all know that the Bank of England base rate is 0.1% right now. And if you track that back, if you're like me, you're quite data orientated. If you're like me, and you can track that back to the 1900s, and it's the lowest interest rate since the Bank of England actually started. So some serious opportunities. You're getting me very excited now. We're just talking about this. Hopefully, people listening in are getting very excited because and it's all very practical. It's not. It's not just theory. This is practical things that we are doing on a daily basis. Some of your listeners are doing on a daily basis, and some of your listeners are going to decide to get the information to do this on a daily basis if they want to. So exciting times.
Very good. I like the way that where the focus is going in terms of always looking at the opportunities and how to adapt to mitigate your risk. And it was nice listening to you on the ideas that you were sharing in terms of the Airbnb sector as well as the commercial sector. Actually, that leads us to the next part of the questions in terms of risk management. I think you already mentioned a little bit there in terms of adapting and having a good points that you just mentioned. So you see, in terms of risk management in trading, we use strict risk management rules, and we basically know our drawdowns of any particular strategy before we start. In fact, our main principle is always, state your risk first even before you enter. Always ask yourself, how much can you afford to lose rather than how much you're going to make, because the upside will look after itself. Likewise, in property, what are the main things that you guys look at in terms of mitigating your risk? So, for example, like in adverse situations, like again in the pandemic or any recession, for me, say in 2008, we had the Lehman Brothers go bankrupt, and there's a financial recession in terms of that. Now we have the pandemic. Reasons are different, but the effect comes pretty much similar. So in situations like this, where a global recession may trigger off, and especially in property, like when your tenants are not able to pay their rent, we know such cases are there, and it's quite increasing as well. How would property investors like yourself mitigate that risk and still keep up to date with the mortgages and make sure that you get a positive cash yield?
Again, through you're kind of coming up with the difficult questions, and they're very good questions, and I'm sure the listeners are loving this, right? So I can give you 3 specifics. Actually, no, I'll give you 5. Actually, I want to share with you 7 specifics that we do. Okay. So here.
Just before you go into the 7 specifics, I know that some questions are coming in. Just for the audience, don't worry about it. We'll be handling all the questions later on. There'll be about 5 minutes in the end that we will answer the questions. So
Thiru, you and I, you can speak about trading all day because I know you love it. And I can speak about property all day. How much time have we actually got left?
Actually, we got only maximum about 15, 20 minutes. And I guess you wanted to share some slides as well. So I'm aware of all of that.
No, that's fine. So I'll say the 7 specifics quickly then. Yeah.
All right. Okay. No problem. That's very good.
So first thing, specifics in property is you need to know your gold mine area. So your specific postcode, like us at Premier Property, we call that the gold mine area. There's too many people just going out there randomly going, someone says Manchester, someone says Liverpool. That's, I'm going to be very straight with you. That's a lot of nonsense. You need to actually work out your specific postcode. Really important. So that's one specific. We have a number of different ways of doing that. So we have a whole system on how you can find that. It's not rocket science. It takes a couple of hours. Job done. Okay. So one is, do you have your specific postcode? And just like in trading, you won't just listen to someone who says, "Oh, this is a great bet. Let's invest in that." You want to make sure you got you've done your due diligence. So number 1, gold mine area. So now you know that you're investing correctly. Number 2 is you can use finance. Now I can't give you financial advice, but I'm just showing you what we are doing. So what we do is we fix rates. So once we use a no money in system, so there's none of the capital left, we actually fix the rate. And right now, what we're doing is we're fixing a number of projects in terms of the mortgage rates. So we like a 5-year fixed. A 5-year fix is brilliant because what that does for you is it creates, first of all, it's like an insurance policy. You know exactly what your interest rate is going to be for the next 5 years. So it doesn't really matter in terms of fluctuations up and down. That really helps you, if that makes sense. Yeah, you got your fixed cost on a monthly basis. You know what it's going to be for the next 5 years. So that's another way you can de-risk. So that's another specific. The third specific when it comes to tenants is you do want to vet your tenants. Now, the great thing is there's even more tenants than there was before. The pool of tenants is increasing because unfortunately there are people that are, they're losing their jobs. There's people losing properties. There's people that are migrating. The whole effect of the technology, like Microsoft Teams and Zoom and all of this kind of stuff is really helping people to understand that, you can actually work more from home. So maybe you're listening and you're actually doing some of this right now, right? So, people are migrating to areas where it's more cost effective, if that makes sense. Mm-hmm. Yeah, if I'm making sense here for you, right? So that's another third specific. That's my third specific, isn't it? Yeah, gold mine area. Yep. Third specific is that you have an area with larger pool of tenants, and the third specific is you want to make sure you reference them, making sure that they go through a reference process. The fourth specific I want to share with you is that with the reference, we are also taking on a tenancy insurance policy. So here's a really good one that you can use. We've searched the market. Feel free to write this down. I normally share this on our masterclasses on our 4-part Making Money from Property workshop. This is an insurance policy which you can use. Alan Boswell. Alan, I believe that is Boswell. So Alan Boswell insurance policy, which means that you got the belts and braces. So if once you've rented it out, a tenant loses their job, they can't pay, the insurance policy kicks in. So how many specifics is that? Is that 4 so far?
It's four, yeah.
Right, okay. So specific number 5. You want to make sure that you calculate your numbers right before you buy the deal. So at Premier Property, we have deal analyzers. So we analyze a deal right from the beginning, making sure that the yield works, the uplift works, all the numbers are correct. So you really want to make sure there's an analysis of the deal, not when you bought the property, by the time you're actually thinking about getting in. So you get in after you've done the deal analysis. So that's the 5th one, right? Mm-hmm. So the next specific I want to share with you is making sure that you've also used the Premier Property bar system, where you've already factored in at which point that deal becomes a no money in deal. Because it does not matter if you think about it, if you're in an area where, let's say, the prices aren't growing or the prices might drop or whatever happens, if you can be in a situation where you can rent the property and you can, the capital that you've put in, you can actually take that back again. In effect, what you've got, and I'm just going to share with you, kind of an analogy. Think of it like a cash dispenser. You've got a cash dispenser that has some equity, some value in there, because you've got some value in there. And on top of that is throwing money at you every single month, the passive income. So literally, if you got that, it doesn't really matter if the prices are going up or going down. If you put all of these together, you've created that, and that is a no money in deal. And if you do every deal like this, that is another way that you can really make it a success. And the 7th specific I want to share with you is really be specific with the strategy. I kind of touched upon this at the beginning of our conversation. However, that is so key. So are you doing buy to let in the gold mine area that allows you to do buy to let? So for example, one of our areas for buy to let, we have 4 specific areas in the country. We're very, very specific in the areas. And one of our areas is in the Midlands. And in there, we will do buy to lets and HMOs, but we won't do developments. I'm based in London. In London and around London, we do developments, but we don't do buy-to-lets there anymore because the buy-to-lets don't work. The development actually works as a strategy. So, the 7th point I'm sharing with you is to have your specific strategy so that you've got that peace of mind and you're de-risking. So there's 7 there for you.
Very well, I always love the point that you always quantify everything, Kam. It's very similar to what we do over here at Master the Markets as well. In always checking, of the outcome first, and then having a specific quantified strategy, which actually complements each other and also reduces the drawdowns. So thanks for sharing that. So it was really good. I really like the point number 4, where you're talking about the tenancy insurance policy by Alan Boswell, which people can consider to minimize the risk, especially at times when the tenants are not able to pay as well, and to also vet your tenants. I can definitely agree with you on that, on how important that is. Just a very quick touch on, Kam. I know we are running short of time, and I want you to share those slides and give that value to the audience listening in. And we also want to tell them where they can find out more about you as well. I'm sure most of them will be looking to find out that as well. But before we go, just a quick touch on, which is a very popular usually discussion actually. When would you recommend towards capital repayment, or just only taking an interest-only mortgage? Would there be specific phases in your life where you would just only take interest-only mortgage to increase your cash flow, or would you recommend capital repayment right from the start or later on in your life, or would you just say keep on to interest-only for forever? I don't know. What are your views on this? Just a quick touch on.
Through that is you've asked some really good questions, but that is the most exciting question of this webinar. The question that you just asked there. Because here's the thing. The vehicle for you, of course, is trading. The vehicle for us is property. That's the vehicle. But really, what makes your wealth is mitigating taxation. And when it comes to property, taxation is a choice. And you heard me say that correctly. Tax is actually a choice when it comes to property, according to HMRC's guidelines. And we're always on the right side of HMRC. So tax becomes a choice. Secondly, leverage. And I'm sure you share techniques on how you can use leverage in trading. In property, in another way, that you can leverage. Finance is readily available. And my point is, when the actual leverage is happening, when the market is quite in a situation as it is right now, in a recession and things like that, inflation tends to grow, doesn't it? And as inflation grows, you think about it, the people with money sitting in a bank right now, they've got a problem, haven't they? Because that money is actually in real terms being diminished by inflation.
Exactly,
And
like Ray Dalio all says, Warren Buffett says cash is trash, when inflation happens. Yeah, carry on.
exactly, 100% right, exactly. And in real terms, and if you're like me, you don't believe those figures that the government's saying. I believe they're much higher than they're actually being said in terms of the inflation index, in real terms. And in real terms, inflation is eroding that money. Key point, it's eroding the money in the bank account. But at the same time, you imagine, you learn how to do this, you now leverage, and you get a loan or you get a mortgage, which is interest only. Interest only. Now, I can't give you financial advice. This is what we are doing on a consistent basis. So that money that you've borrowed, that loan itself, if you think about it, the same way for someone with the money sitting in a bank is being eroded, that loan is also being eroded, isn't it? That monetary value is actually being eroded. So inflation, recessions, all of this stuff, is such an advantage because that is actually helping your loan to diminish over a period of time. Okay, so hopefully you're getting this, everyone. These are things that we can, of course, share with more time for sure. Okay, but we can do that. But my point is that money is getting diminishing, so it's all helping you to actually move forward. So what we don't do capital and interest, especially for residential development. Sometimes you need to because that's the way the financing works. But even then, we aim always for an interest-only element because the capital itself is being eroded. And if you're doing it like us at Premier, where you got a no money in deal, you use the bar system, and then you find that you got no money in deal anywhere, and it's just a loan, and the loan is being diminished over time anyway. That is beautiful, isn't it? Something to think about, something different, right?
Yes, just a quick thing on that. When you're saying the loan is being diminished, but in an interest-only repayment, you're just paying the interest. The loan itself is not being paid off, isn't it, Cam?
That's right. Over the 4 evenings that I'm gonna share with the team here, I will be discussing this in much more detail. So what I'm saying is, for example, my uncle Raj, right? He's got a property he bought in 1970 for £4,000. Okay, a 2-bedroom, 3-bedroom actually, 3-bedroom Victorian mid-terraced house in London E12. Okay, so he bought that in 1970 for £4,000. At that time, that was market value. 1970. That same property right now is worth £450,000. Now, same property. Okay, over time, what has happened to it? What's happened is the money itself has actually, the value of money has gone down. The prices have also gone up. So the number of factors. But my point is, on that £4,000, he didn't. He's an interesting character. I'll speak about him over the making money for property workshop that I'm doing. I'll speak about that there. But my point is that £4,000, part of that was a mortgage, wasn't it? If you had kept that, just as an example, interest only. So let's just say it was £3,000 as an interest only mortgage. If let's just say, just that specific example, today, if he kept that, he's got that property as his residence. So he paid it off. But let's just say he kept it. If he kept that £3,000 mortgage, that mortgage would still be interest only £3,000 today, wouldn't it?
Yeah.
It takes a little bit of time for some people to get their head around. It took me some time to get your head around. But when you get your head around and you understand it this way, that mortgage would now still be £3,000. And, that becomes such a small amount of money, doesn't it, in the whole great scheme of things?
Exactly.
So if you decide to, let's say, buy two properties, you could buy one, you could sell one, you could refinance them, you could keep both and maybe just pay off that 3,000 with just earnings. So there's so many ways that interest only actually helps you as a property investor.
Thanks for just touching on that, and I'm sure people can find out more about it. I mean, as you give them the link to find out more about you. Just very quick thing, I'm just scanning through because of thinking of the time that we have. Let's see, I think you touched most of it over here. Target questions, I just want to just quickly touch on this. Usually in trading, we have a predetermined target, or usually we put a target based on price velocity and open equity data. As the market does that, then we might think of the exit, or if it doesn't do that, then we do not get out of that trade that keeps us giving us the cash acceleration. Now, similarly, and just a little bit for the audience, I mean, for those of you listening in, I mean, who are wondering, like, property investors not got into trading, we will be sending you some free information later on, so you can learn the basics from that. But coming back onto property over here, Kam, is that in property, do you guys have predefined exit points, or do you buy and hold for change depending on what type of strategy you enforce?
Yeah, so when you think of it like no money in, the difference between property and trading is that I'm a trader as well. I've traded for a number of years as well. What I like about property is that you make the deal no money in, and thereafter you've got a number of ways of doing that. So you can actually you can buy and hold, you can keep the property. There's buying and sales strategies as well. A lot of options open up, a lot of choices. So the crux of it is to get to a no money in deal. Once you do that, you've really done the job really well. And thereafter, whatever option that you decide to take, it's viable because you've done what you needed to do, which is make the deal no money in deal.
Interesting. Thanks for sharing that. I think that's the key point over here, isn't it? I mean, as the end outcome, get it to a no money in deal. Just a quick touch on before we get the questions in, if you want to share anything on your screens. As you're trading, it's such an important profession because the thing happens so fast, Kat. It's not a slow moving game. It's much more faster than any other investment asset class out there. So a very important point that we actually focus on is a lot on psychology. In fact, I quote on Ray Dalio mentioning that actually winning the markets is even more tougher than winning in the Olympics. And I actually agree with him on that because you need to have so much stamina and so much speed of how things change to always keep aware. So in terms of your property investments, do you guys also do some kind of methods and trainings to keep a healthy mindset or any kind of psychological techniques that you all do, Kam?
Yeah, absolutely. Yeah, so the mindset is very important. But you see, the mindset comes from knowledge. And also, by hanging around people who are actually doing it.
Mm-hmm.
So, for example, when I did my first development, when I wasn't a developer, I worked with someone or he mentored me to actually show me how to do it. Mm-hmm. And when you hang out with people where you're learning from people who are actually doing, and you want to be doing that, right? Let's keep it honest. You want to be working with people who are doing what they're saying they are doing, which is very important for us. I will only share what we are actually doing now, not 12 years ago, what we are active with right now in 2021, because that's what we are. We're active investors and developers. And you're an active trader, right? So if you can hang out with people, if you can get the time with people where you can learn from them, that helps with mindset immensely, because everything that is being shared is real and practical. So your brain starts to think, well, hang on a minute, if he can do it, I can do it. It starts to happen. And when you got proof, in a moment, if I get a chance, I'll share with you one of the projects, right? Just a little project I want to share with you. But you see proof, and that helps with mindset. Also, having a really good peer group, people around you, people that we've got listening in right now, having that peer group around you, people like-minded, who are you're avoiding the naysayers, because the naysayers, trust me, the naysayers will bring you down. The amount of times people have said to me, Cam, you can't do that, you can't do that. Eventually you get kind of, I don't want to say immune to it, but you kind of like, you just do it anyway, and you get a result, and that's fine. So if you can keep that peer group, learn from people that are doing what you want to be doing, get proof, get into the environment, and really feel the sincerity, and what happens is the mindset just comes along.
It's interesting you say that, Cam, because in all our materials and contents and presentations that we do, we always see that two things got the deepest impact in their life, which is one, the people that you hang around with, and second is the books that you read. In fact, both of those things keep you around like-minded people, which is what you've just reinforced here. Thanks for sharing that and reinforcing that point. I think we come to the last part where there's a little bit of time. We've run short a little bit. If the audience doesn't mind, we'll just go over for another 5-10 minutes. So during in that 5-10 minutes, maybe you want to share your screen, show us whatever that you want to show us. But in the time being as well, if you can let us know also for people who've got to go due to time and all that, maybe we can put into the chat box, if you can let us know, where is the place that they can find out more about you, Cam?
Well, if I'm completely honest about you, Thiru, this is not about me. This is actually about people moving forward. And the reason I do trainings and help people with the property side of things is because, look, let's be honest. Yeah, okay, we got financial freedom, but just because you got financial freedom, what do? Go and sit in a corner for the rest of your life? It doesn't work like that. So the reason I do honest trainings is to do the same thing I've done for myself and my family. So it's not really about me at all, if I'm being honest with you. It's actually about genuinely assisting people to move forward. And that's why we do training. So if anybody wants to join us, you are welcome. You can join us. There is a slide that's coming up. I'll share with you as we're going over time, I'll share with you the case studies afterwards. There's a slide that's coming up. And as you invited me here, it's not a free training, but we are going to offer it for everybody here for absolutely free, just to be crystal clear.
Do you want to give us the link so that we can share as well?
Yeah, absolutely. So there's a slide coming up and there's a link going in the chat box. It's 4 evenings. It's via, of course, webinar and so on. And I will be sharing the 8 specific strategies out of the 10 where you can actually move forward. There it is. The link is there. I'll just read the link out once. It should be in the chat box. So all you got to do is click on that link in the chat box, of course, and you can register. The link is, and what you're getting is a 4-part online evening session over 4 evenings, where it's an online training, and I will go through much of what we shared today in more detail. So I will identify specific strategies that can work for you. I will share with you real case studies with a lot of proof and numbers. And I'll also share with you, how you can actually do it and specifics within that. That is 4 parts, 7:30 p.m. between the 8th of Feb to the 11th of February. And the link is there. You can see it. It's bit.ly/Premier Markets with an S. It's in your chat box as well. So you can just click on that link and go there. Like I say, it's not a free training. The value of this is over £1,000. But as Thiru and I mean, how long have we known each other, Thiru?
I think it's been I would say at least it's about 7-8 years, isn't it, Cam? I think I would say.
Yeah, it's coming up to, you're right, 7-8 years. So, to honor everybody that's here, this training is made available for you for absolutely free. And I hope it inspires you and, gets you some deep tips, where, you can really do both things, can't you? You can do trading and you can do property and trading. They go kind of hand in hand. I'm a trader myself, and the property is here. So feel free to come and join that. So hopefully you got that link there.
Yeah, actually, it's in the chat box. Thanks for actually sharing that. It's very generous of you, and I think everybody listening in can already see how much value. I mean, Cam has already given in 1 hour, and think about that. I mean, in 1 hour, he's given so much and so much quantified parameters and specifics that he has given you just in this 1 hour. Imagine what you're going to get in these dates as a 4-part online workshop. I'm sure you'll be much more. Thanks for being that generous. Cam, just to conclude off, do you want to share with us anything else, like on your screens or whatever?
I think we're kind of out of time, but these are things we'll be covering. So this is our Premier Property Strategy Pyramid, what we discussed. It's okay. The acronyms will be all explained over the 4 evenings. So that's that. There's the Premier Property Bar system, the blueprint for success, buying, adding value, and releasing seed capital. Of course, like I say, I'll be sharing that with you over the 4 parts as well. I had a live case study for you, but I don't think we've got time to go into that.
Exactly, probably not. Yeah.
But I will. My promise is I will go into this specific case study over the 4 evenings. I think it's either on the 2nd or the 3rd or the 4th. It's one of those. But I will be sharing that. I'll be sharing these as well. The exact numbers, figures, what we did it. I'll even be sharing my bank statement with you like this. Here it is, TSB, showing you how much money comes in. So I'll be showing you all this and going into much more detail of this. Be rest assured over the 4 evenings. And there's a link. Yes, just got to click on the link, join in, and happy to see you on the 8th of February.
Brilliant, Kam. Thanks so much for your time and for sharing this link. There are just a few questions that just came in, but most of the questions are, I think, kind of you covered. But there's just this one thing maybe that you can maybe answer before we conclude. One is that they're asking, how can you refinance buy-to-let properties if you have a 2-year or a 5-year fixed interest rate product?
Yeah, great, Thiru. Really great question. In terms of time, so you know, I don't know how you are for time, Thiru, but I'm happy to answer as many questions as our team here would like answered. So I'm okay for time. You know, I'll leave that to you how you want to do it. To answer that question specifically, yes. So you fix rates for 2 years and 5 years. Of course, no financial advice. This is what we do. But what we've done before that is we've actually got a variable product where we've done the no money in, and once the no money in has been done, so you've had a short period of typically 6 months, let's say to a year, where you've refinanced that money, you then refinance it onto a 2-year or 5-year. Does that make sense? So there are products that are available for you variable, and even if you have refinanced on a 2-year or 5-year, what you'll find is there are optimum points on that 2-year or 5-year where you will find that the ERC, or also known as the early redemption charge, the penalty that you have to pay for, you know, redeeming that mortgage, actually falls away at specific points. So for example, on a 2-year product, depends on the lender, but typically on 2-year, what you'll notice is that straight after the first 12 months, the early redemption penalty actually reduces significantly. And if you are going to use the money like we do at Premier, if you're going to use that money to refinance to then put it into another asset, and the asset that you're buying is going to actually make you more money than the ERC for releasing it, then the way we look at that is opportunity cost. So there's an opportunity cost, isn't there, if you don't release it? So what we do is we factor that in. So one of our sayings is the more money you spend, the more money you make, provided there's a return on investment. So the normal investor out there would be concerned about the ERC. What we will say is, well, hang on a minute, if we can time it correctly, we'll minimize the ERC, but you know what? It's okay to release yourself from that product and get into a new product, which is even better, where you're making more money, if that makes sense. So in a 2-year, you know, looking after 12 months. On a 5-year, you normally find that after the 3rd year, it starts to drop off. So I've explained it with you 3 ways, really, haven't I? So one way is when you buy with a variable in the first place anyway, knowing with your end goal right at the beginning, which is to make it a no money in deal. You then refinance to a 2-year, 5-year. If you're already in a 2-year, 5-year, or that's what you can get, as I've explained. Secondly, you know, the ERC falls off on the 2nd year, on the 2-year after the first 12 months, and it falls off on the 5-year, typically after the 3rd year. And it's okay, in my view, to spend that money because what you're going to be putting it into is going to make you even more money. Hope I'm making sense here. Coming from a poor background, that took me a bit of time to understand that. But, you know, some people can really shortchange themselves by not spending money where they need to spend it.
Yeah, I think it was very well said in terms of, you know, looking at your opportunity cost and minimizing the loss by putting it into actually a higher yield strategy. In fact, in trading, we always do that anyway. Not to look at the especially the immediate drawdowns, but look at the overall picture and how the other trades can override the losses and bring you to positive equity line. So I think it was very well explained there, Kam. Thanks for that. I think because we are running out of time, I think we will probably conclude here. But I think, the common points, what I've always found when we are doing these interviews is that there are some common principles that are always there for trading or investment or in any vehicle that we choose to invest or to trade. I mean, it was very nicely told over here. The conclusion we always come is that property and trading, they complement each other, and it's always another asset of diversification for people to minimize their risk and also increase their returns in accordingly to adaptable market conditions. Cam, just to before we conclude, is there any last points that you want to share with the audience, or
All
last
I would
message,
say,
takeaway message?
yeah, all I would say is whether it's trading or putting aside property,
Oh, sorry, Cam, I think we're getting some background
that's,
music.
that's all right.
Okay.
So I was just going to say that, whether it's trading that you're into, so people listening in, watching this right now, whether it's trading or whether it's property that you want to jump into, just create your financial economy. Know that, you have the opportunity to do it. Just choose something or, explore something that works for you and, make it happen. Make your financial economy happen because, I've done it for my family. And if you haven't already, then you can do it too. And just come and hang out with us, just come and spend some time with us, because as Thiru does and I am doing, we're happy to share our heart for you and happy to share specifics so that you can do it too.
Thanks for sharing that last takeaway message, Cam. And as we always say, thanks to everyone who's been participating today. And as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master. Thank you, Cam. Thank you, everyone.
Thank you, Thiru, for having me. Thank you, team.